Today's number is 4,000 because one of our favorite trades of the last 2.5 years has finally done it, hitting a milestone on gold that we've never seen before. So as we witness history, what other things are currently going on? Well, one of them is that we've got a bit of a strange event. The US dollar is also rising at the same time, and meanwhile, the Magnificent Seven is starting to show weakness. The biggest problem, though, could be that this is a massive stock pickers market. And according to the latest Goldman Sachs report, this could be the calm before the storm. Guys, don't go anywhere. Let's take a look at stocks, commodities, and cryptos in the weeks and days ahead. There's a lot to go through. See you soon. Well, welcome back everybody to The Daily Show. My name's Thomas Atkinson, and in today's video, we'll be taking a look at the macro, the data, and some big dark pool liquidity. Yes, Wall Street's back, and it's making some plays in some of our favorite asset classes right now. Could it be a sign of something big to come? Well, let's take a look firstly at gold. And I've got to say, first off, well done everyone. If you've been holding gold for a while, you guys would know that we've been aiming for this 4,000 to 4,200 level since the pennant breakout. Before that, we've obviously been upgrading it, and my long-term goals for gold might be getting even higher. But is this parabolic? Well, when you look at a chart like this that we posted over on our X account, links in the description down below, you certainly would start to say it looks pretty wild. And even since this announcement, it's up another $14 an ounce. So why do we bring this to attention? Well, one of the things is that it is kind of overbought. And for the first time in a while, we've seen a large transaction come through. A big sweep, and it happens on a 3 times levered gold fund. Now, why is this important? Well, some of the other ones have kind of been at target levels, and we've had some volatility after that point. So I think right now, it's one of the most dangerous times to buy gold if you're not ready for the potential of at least upwards of a negative 10%. Now, does that mean that the dip won't be purchased? I think it personally will. But at the same time, you've got to be aware of volatility. Remember, it's kind of like the calm before the storm. When everyone's jumping in on something, it's sometimes a little concerning. And boy, oh boy, are people upgrading gold. I've seen some people going upwards of $20,000 an ounce just in the last month as this run has been going. And you guys know that I'm not a big fan of when people go into the twilight zone. Yes, it's worth more than it probably is right now over the next couple of years, but at the same time, the twilight zone sometimes means euphoria and FOMO. So let's talk about the performance of gold so far. We know that metals has been one of our best looks this year, and we've been loving metals. It doesn't matter whether it's palladium, platinum, gold, silver, or of course rare earths in particular. And all the economies that have had these have been moving up. We've already shown this a few times. But there's a couple of other interesting points. Has it become overpriced? Well, gold miners have been on a rally like no other. The last 3 months in particular, they've done the biggest percentage you've ever seen in over a century. But at the same time, if you take a look at the amount of money that's been printed over time, and you then look at gold miners and how expensive they are, according to the latest work here from Tavi Costa, it kind of shows you that, yeah, it might just be the beginning of maybe a bigger rally. And I think this is kind of important to bring down the short-term and the longer-term goals. Another one is that commodities are currently going up against inflation expectations. So recently we've seen Japanese yields going up. We've seen long-term yields going up as well. And of course, the US dollar also rising. And this brings us to the question of whether we're seeing now re-inflation. Now, I asked you guys this question. A lot of you did answer that you believe inflation is going to go back up. So in a video very soon, we'll take a look at the 1970s, which is obviously where they kind of inflated away a bit of a debt, which is the most likely scenario for how the government might be dealing with some of the debt problems in the future, and how the yields, especially the long-term yields, and more importantly, the commodities market might be showing us that this is already occurring underneath the hood. Commodity producers versus oil are also moving up, and oil just recently, while taking a new low, has started to rally again, signaling that at least on the smaller timeframes, there might be a little bit of action to come. More on that later in today's video as we go through the charts, because boy, oh boy, there's some interesting setups starting up right now. Now, according to the latest data from Goldman Sachs, could this be the calm before the storm? Basically, we know that we're in a stock pickers market. So what that means is that if you've been buying semiconductors, if you've been buying metals, if you've been buying gold, stocks or any of these types of things, you have been outperforming the S&P 500. In fact, according to this, the S&P 500 3-month realized average stock correlation is like the lowest it's ever been, except for basically over here in 2018. Now, why is that important? Well, it basically tells us that not everything is going in lockstep. And while that's great if you've been picking the right sectors, it can also be a bit of a warning sign. Last time we saw this, we entered into what was called Volmageddon. And if you remember, that was in 2018, causing a market decline of 13%. Now, I'm not to say that that's going to happen, but what I do think is that this type of read often is a precursor of calm and, more importantly, maybe a little bit of stupidity. And the same thing's happening in the bonds markets. The bonds markets doesn't care. No one cares. Since June, you can see here that the market has continuously gone down in terms of its concern for any particular problem on the horizon. And while, of course, you trade that, you invest in that, and of course, you look towards the upside, at the same point, if this changes, boom, all of a sudden we could be getting volatility. And for any new viewer out there, firstly, subscribe. It's great to have you here. But at the same point, check out that daily 20 moving average, particularly on the S&P. That's going to be such an important level to be watching in the future. Another thing that's happened is we've just seen semiconductors go up to their most overbought levels that we've seen since, guess when? 2017-18, which just so happens to correlate exactly with when we saw that Goldman Sachs report number. So what is this? It's an RSI overbuy. This is not a signal instantly to sell the markets. RSI can stay overbought longer than you can remain solvent, that's for sure. And we've seen that recently in gold stocks, gold in particular, and everything else. But it is a precursor of usually some volatility on the horizon. It always ends with some kind of extreme volatility, and that's just something that you want to keep in the back of your mind. At the same time, we've had one of the largest transactions go through the most popular semiconductors index, a 9 trade here right at the highs, and then the last 24 hours we saw a little bit of selling in the markets. And of course, the Nasdaq days since a last 2% down daily move here from Blue Curtic, you can see it's pretty rare where we're at. And again, when have we been on runs similar to this? Well, 2017, 2018, and of course, that 24 run. So generally speaking, if you're looking at it, on average, the next kind of 15 days or so usually stops most of these particular rallies and gets a little bit of, you would say, volatility in there. I also think it's worth noting that October is often one of the most volatile months. It has the highest VIX correlation with increasing VIX. And we've seen that kind of show itself a few times. Now, is this to say that things are all going bad just yet? Generally speaking, probably not. Remember, the data that we've got so far here from Mark Ungewitter, you can see that we've got some pretty decent rally kind of data, and that if we have started a new cycle, which some people believe that we have due to that over 20% sell we saw this year, that we've got early days and we're still looking towards at least some form of kind of 70%-ish gain from these levels. Now, that's something that, of course, you want to keep in the back of your mind. But if you're a believer that 22 was the low, then this is starting to get a little bit older. And of course, this is a up for debate kind of topic. Another thing is you got to ask yourself, why are we moving up? Well, a lot of it just has to do with, of course, the economy and the stock market being a different thing. Tech spending is going ballistic this year. And take a look at that activation of tech spending and CapEx coming through, starting to rise up there with some of the best thrusts that we've seen. But when we do get to this ratio, according to Charles Schwab, you can see here that this ratio in particular has often been a bit of a topping of this spend. So it's an interesting point to get to. And if you want to take a look at the more detailed version of this chart, I posted it over on our X account so you guys can check it out. Again, links in the description. Another topic of contention has been, will we see the Russell go forward over the other stocks? So that is small caps, mid caps, different markets than just large ones performing better. Well, as we said at the start, maybe the most important thing to look at here is going to be what's going on with the Magnificent Seven. But I also think that if we do get pullbacks around these all-time highs, that we have to then be considering, similar to over here, will we then get the Russell 2000 being the best performer? And if that happens, well, it's a whole different discussion point. From the compound here, this is generally how, of course, October plays out if you're taking a normal year, but I guess this year is not that normal. We expected over a 10% sell at the beginning, but then, of course, the rally has been one of those historical ones, bringing with it every single type of thrust that we have ever really seen on the channel. including the Zweig breadth thrust and obviously the 770, which we reported on back in May. And since then, it's just been a rocket ship to the moon. Now, what about CTAs? Will they trigger shorts? It's possible. There's also possibility still for, of course, more rallies into something like 6,900. You can see that this is a very important point according to the latest Bank of America data. And basically that just tells us that momentum funds are really willing to switch kind of like that if necessary. And I think in many ways, the daily 20 moving average is going to be a key point for this switch should it happen. From the macro side, a lot of people believe that private equity is underperforming and therefore that's a bad sign in the markets. It's certainly something for us to watch. And of course, it is also important to note that when we get these big rallies, and you can see some important ones, particularly I think here with this .com boom and also with this boom over here, that sometimes when we get these types of rallies, we've still got a bit to go. And in fact, usually when you're looking at not so much a pullback that gets bought, but actually a real crash, you're generally looking for what we call a parabolic market. And at the moment, we seem to have only parabolic markets in very particular sectors. And I guess you could argue that gold is also doing something similar. So what about Bitcoin? Is Bitcoin doing it, guys? Well, Bitcoin is doing exactly what we would think it was doing, actually. It rallied, it dropped, it's picking up, and obviously a lot of people believe we're in October for this particular coin and indeed the entire industry. Now, remember, if it's going to follow similar paths that before, November was technically where we usually see activation of alts. And if that does happen, then that can go through into January. But do remember that this alt market doesn't last long. I think it's like 45 days on average. And if we do start to see alts like Cardano and others start to ramp, we'll talk about that. But for sure, the Bitcoin market seems to look a little bit better on the technical charts. That being said, we did just see the largest trade ever recorded on SBIT, which is, of course, an ultra short Bitcoin ETF. And was that an entry? Because you can see here, boom, massive trade, picks back down to it, and then suddenly thrusts back up. So that basically is telling us that, of course, Bitcoin has seen a bit of selling. I think if we do see selling on Bitcoin, though, it's most likely going to be purchased because, again, this tokenization story, I'm not sure it's done. I think there's a lot more to go. And there's a ton, you got to remember, there's a ton of ETFs, which we'll talk about coming up later on this month in terms of approvals. So you can see here that alts are right back at around that support line as well. The most important thing is always going to be structure. It's not what anyone says, it's what they're doing. Remember, flow, structure, TA, that's what we're about on this channel, data, bringing it together to try to get a low bias version of what the market is actually doing and to bring also interesting concepts in. You've got to be balanced because if you're a bull and you're not looking at the bear side, you're doing yourself a disservice. And if you're a bear and you're not looking at the bull side, it's the exact same thing. So, of course, we try to keep it in the middle. And a lot of you guys do appreciate that. And I do appreciate your comments. I've been reading a lot of them recently. Thank you so much, guys. Very much appreciated. Let's now take a look at October. Now, Wayne's updated some data here. And obviously, you guys know that we were looking at October and it looked kind of bearish and not so good. Well, it still is actually going towards the bearish side. But if we take a look, of course, at how everything has been running this year, the consistency of this particular market, then again, it can show volatility, but maybe not like an epic sell. In fact, there were no really horrible sells here by the end of October. The worst one being back in 1970s, which was about 7%. So why is that important? Well, it shows that even if we get a dip, take a look at that November read. It tends to be quite bullish. And you could say, well, this time's different. But what I think is interesting about this is take a look at October 20th to 27. Now, this is the end of the month, similar to that compound chart. Whoa, 4 to 16. Wow, that's not very good. So if we go sideways here, could it be the exact same again? Certainly something we need to follow. Let's now go into the S&P 500, it's a series of higher highs and higher lows. Of course, we have had a little bit of an engulf here in terms of a candle. Could that push us back down to the daily 20? It certainly could. And I guess in terms of where the daily 20 is right now, it's at 66.50, which does line up pretty well with options put walls and around that kind of level. But the other thing to note is we made a higher high. So when we did that, it means that in general, you still have to kind of believe that these 20 moving averages are going to be generally held. And if we take a look at the futures market, and you can see here the updated options high and lows for the day, guys, we kind of get that 66, kind of 60 area. That's the daily 20. In here, there's quite a lot of trade as well. Volume profile, most traded kind of zone is in there. So why is that important? Well, it's kind of pointing towards that even if this does happen, there's probably going to be a bid at around that point, at least with the available evidence so far. And you can see why the market just cannot sell, because every time we see even a little bit of red, look at this. Everyone stacks a put. 6,700 now becoming the put wall of the next 24 hours. And then you'll see a lot starting to happen on that 6650 zone, which we just talked about was the daily 20. If we go out to the next couple of sessions, 6,600, 6,650, they become the two levels. And again, there's actually quite a lot of noise here. There's a bit of calls, there's a bit of puts. We're not so cleanly in, I guess you would say, a call kind of squeeze. 67.50 is probably going to give us the squeeze to go to 68 though, if that does happen. Tesla, very similar kind of thing. 430 on the put wall, 450 on the call wall. I think it's really tough to call Tesla just yet. Okay, yeah, the trend's up, but again, if it can't get through 450, it's not going to activate enough trades. And because it's kind of up, down, and all around at the moment with some big news coming out, it does get a little bit more difficult from that action. Nvidia is still theoretically bullish, although that AMD detailed news with OpenAI, of course, made some good memes, but at the same time, it's kind of set up like a little bit of a merry-go-round. 200 still, I guess, the target from the street, and IBIT still struggling with that 70 area and 69 area when it comes to the call. So obviously pretty strong. 66 for IBIT is the put wall for, of course, Bitcoin at this stage. And then there is gold. Wow, this thing is just so aggressive. I've got to say, I'm incredibly impressed by the power of gold at the moment. I wouldn't have thought it was going to go this fast, this quickly. I'm bullish it. I have been bullish it, and I like the metals this year. And boy, oh boy, it's exceeding a lot of expectations. Even I had this early on. But even so, there's a lot of calls. The market is definitely tapping euphoria. Everyone thinks it's good suddenly. I don't like it when everyone thinks it's good. I like it when people don't like it and price action comes with us. But at the same time, 370 seems to be the target. So I guess we just keep chilling on gold until we see more evidence and information. All right, let's have a look now at the bonds market. You can see here clearly there's no real uptick in the bonds. Have we seen it go through this 2.9 ratio? No. Should we therefore be concerned? Generally, no. And that's kind of held true this year with pretty much everything except for that 10% pullback where we did see the bonds, or 20% pullback, where we did see the bonds go first. So that's going to be, of course, a warning sign. Another thing, though, happening on the horizon, take a look at the last 24 hours here for oil. Little bounce, and not too bad either. I mean, it's obviously pressuring this support. You've got this kind of bullish hammer coming through, starting to kind of look a little bit more aggressive towards the upside. And that's something we've seen also with consolidation through quite a lot of the stocks for oil as well. Oil services in particular holding its own. We also have other metals. Now, this is something we've done in our private community. We have a community watch list there where we go through single stocks, metals, all sorts of different things. If you want to join that, links in the description down below. Yes, it is a paid service, but I think I offer quite a lot of extreme value. And again, it's about teaching you guys how to go fishing. You need to learn how to fish in the markets in a replicable way. It's not just YOLO, on some forum and then everyone sits there. And I'm sure, have you guys done that before? I've done that before a long time ago, where you're sitting there and then you all like talk to each other about how great your trade is, even if it's going bad. We all know what it is, but it is about, of course, replication. And one of those things is that the metals, while gold and silver went, all of a sudden palladium, all of a sudden platinum, those two are on a massive basis. And they've already been going for a couple of months here. And there's quite nice pickups. And again, just the abundance in this market. Another thing we've been talking about is healthcare. All of a sudden, last week, boom, there you go, bit of percentage up. Again, abundance in the market, improvement there. But there is one problem, and that is dollar. Now, I suggested, and I thought this would happen when it came to the technical analysis charts. And we've been talking about this one a little bit together. It's pressuring the upward side here and kind of pressuring that 99.80 zone. Now, why is that important? Well, it's going against what most people think. Remember, if it's in the press, it's in the price. It's a very interesting point here for markets. So it's something that I'm looking at. I think the dollar is looking actually quite strong at the moment, and it became a heavily traded zone over here, remember? So we started to go neutral bullish on it. And that's kind of the way that I'm seeing it go here. It's like a hedge on a hedge on a hedge. Now, when it comes to gold, people want me to say, oh, Tom, it's going to sell. Don't know that yet. Have we hit the IBIT level we need? The GLD level we need? No. Do we know that this market is going to have volatility on it? I think so, because it is so incredibly overbought. It's so parabolic, but that doesn't mean much. If you've been trading for a little while now, you just look at PLTR, that stock went crazy. and it went above everyone's expectations and then suddenly sold like 20, 30%. So it takes time for these types of things to play out. It is an upward trend and everyone is piling in. The story of anti-fiat, anti-currency is so extreme right now. I've never seen it like this before. And that's why I think you're getting these huge pushes. Remember, gold and silver is going up against the US dollar as the US dollar is gaining ground. It's a very strange thing. Is this something a problem? I will be watching very closely. Silver, again, all-time highs almost here. Very, very close. I think it should consolidate here, but we'll see whether it does. And Tesla, a few of you guys in the comment section said, Tom, why aren't you focusing more on Tesla? Because we got that initial rally. We obviously pushed, that 450, which means that, stops under these levels might hold, but it's still actually quite neutral. It's the options that I'm most interested on. Break of 450 again, all of a sudden we could be going up to 500. So of course we'll be watching it, but we haven't seen too much there. From the Chinese stocks, it's still a series of higher highs and higher lows. The 50-day moving average is going to be one that you want to be watching on that. And of course, we'll be checking it out. From NVIDIA's perspective, the breakout that we got seems to be going a little bit poorly, but at the same time, it still is a breakout. It is what it is. And yeah, it could be a off top. You don't know that. But if you take it on merit and you look at enough of them, then generally the plan is, of course, to move up. And what we actually saw was with that large semiconductors trade, we've actually seen one of the biggest sells that we've had in a while. Like that's pretty much one of the biggest sell candles, I think, in ages as a raw amount of dollars. What about on the markets, including the Russell? We'll just have a quick look here at the Russell. So you can see the Russell is still going up. It hit our first major target a while ago. Still a series of upticks in terms of going towards new highs and then pulling back to the daily 20. So it's very similar to what we see on the NASDAQ and the S&P. And again, speaking of the NASDAQ, you can see here, holding, dull, very difficult to short. You got to be very careful against that. So you want to be kind of going with the trend as much as you can. This is a stock pickers market. There are plenty of different setups. We just did one on Monday. I think it was Louis Vuitton, and Louis Vuitton is already up like 5, 6%, 7%, whatever it is. So again, there are so many different opportunities, guys. I really want to stress that. What about Bitcoin? I still think it looks good. So even if it pulls back here, I do, and which it could hurt some people by doing that. Then it still has a really strong upward thrust here, and I think that's something to keep in the back of your mind. Yes, there's a couple of big trades coming in, but again, what's your time horizon? Is it small? Is it large? Is it medium? It's very important, and it has been following the general crypto path. So if it keeps doing that, that will be, of course, good. We'll have a special later on this week on earnings because we do kick off earnings season. But do remember, guys, if you want to find out more about how we replicate stuff, check out our community, check out our courses, flash sale for October, obviously going on right now. And then, of course, check us out on X and follow me on LinkedIn as well. I'll be posting a lot there over the next coming week, especially into earnings season. There's a lot of, I think, key insights that I'll be sharing over on LinkedIn. Guys, it has been wonderful having you here. I hope you're having a great day, and I hope you've been able to get some of this opportunity. And if you haven't, doesn't matter. There's always another one on that horizon. I know I crap on about abundance mindset, the game changer when it comes to stocks, commodities, and cryptos. Bye for now.